Hello traders. So this video we're going to talk about the closing range breakout strategy. This is a trading strategy that I use with pretty good success. So in any given month I will have between 70 and 90% success rate on this strategy. Okay, so if we just take the lowest that I have is around 70%, that is a highly profitable trading strategy. Okay, so what is it exactly? So you can see I've got two blue lines here. So we on the hour, and I'm looking at the last two 1 hour candles of the Dow Jones. Now, the important thing here is because we're all over the world, we have different time zones, etc. So I'm just going to work with GMT time. So this is the first bar. If you look at the bottom here, you'll see is the 7 p.m. GMT bar. So that's the 7 to 8 p.m. GMT bar. That's the actual last hour of trading on the Dow, right? And then you have the closing auction bar. It's not entirely a full hour, but you know, for my purposes, it is. And that is the 8 p.m. GMT time bar. Okay, so those are the two that define my range. So the blue line there is the top of the range, and the blue line here is the bottom of the range. Okay, I do have the 200 EMA and the 20 EMA on this chart as well. The rule is quite simple. I'm looking for a break, but the break has to happen when the Asian session is open. So in other words, this bar here is the midnight GMT bar, and that is the opening bar of the Asian session. Between this bar, which is at 8 p.m. and midnight, there are some other trading bars on most platforms, but I ignore those. If there's a break inside that period, you ignore it. It's not something to worry about. You're only worried about a break that happens inside the Asian session, okay, or the European session for that matter. But any break that happens between 8 p.m. and midnight GMT time, so in other words, after the close of the US session and before the open of the Asia session, that is not a valid signal for a breakout. Okay, so the rule is quite simple. I'm looking for a breakout, and that breakout needs to be on something like a 10 or 15 minute candle. I use 12-minute candles for that. Okay, so let me just tidy this up. And what I use is Fibonacci extensions for my targets. So we're going to just extend it so we can see it. And what I'm looking for is a 12-minute bar close. I use 12 minutes rather than a 15 or 10. And you can see I had this 12-minute bar here that closed below the range, which was my signal bar to get in. Stop would be at the top of the range here. Okay, and my targets are as follows. First target is the height of the range, which is my breakout target. Target 2 here is 161.8 extension of this range. I'm just going to go back to the hour. It's a little bit easier to see. Target 3 is a 261.8 extension. Okay, target 4 is the 361.8 extension of the range. Okay, so those are kind of the targets that we'll use. Now you can see on this breakout, we had the breakout and we hit target 4 before pretty much reversing back to the upside. So the way to trade this really is you can have multiple lot sizes, and you could either just aim for the breakout target all the time, or you could aim for target 2 all the time, or take some profits here and let some run for this and trail your stop to the downside. Okay, many ways to run it. I think the strategy is not about how you enter the market and how you get out, but giving you the targets to take profit, and how you take profit, you need to work out what suits your risk profile. For me, I like to take the trade and take the bulk of my profit at the breakout target, and then I will hold some for target 2, and then I'll hold a small runner for target 3 and 4. Okay, so that's kind of how I trade it. Okay, so let's just move on to the next day and let's look at some examples here. So this range is pretty much almost the same height as that closing range, and that often happens as well, just by the way. And you can see we had a breakout, and again, breakout target was hit, target 2 was hit, target 3 was hit. Okay, and there's the next one, and you can see again the closing range is the same height as the previous 2 days, and we hit target 2, target 3, and target 4. Now, this example is a difficult one. It's one that, excuse me, it's one that I'm not a fan of trading. When we gap down like this to the breakout target, it's very difficult to get in at this level because your stop needs to be at the top of the range. So, you know, instead of having a stop that is 70 points, you're now looking, well, by the time we wake up, you're looking at a 200-point stop loss. So that's not a trade that I would get in. I want to be awake basically when the breakout happens. Okay, and one thing that you will notice, and you can see again, the closing range is very close to the previous couple of days. One thing you will notice is that these targets are typically hit in the European session. Okay, sometimes they extend into the US session, but more often than not, they're actually hit in the European session before they move the downside. So you can see here we had a breakout. The breakout target was hit and target 2 was hit before we consolidated and then moved the downside. Okay, next one. Again, we had a breakout. Breakout target was hit, target 2 was hit. And that was really in the early morning session. And then you can see the afternoon session, we had a break below the range, and then the targets were hit to the downside. So there's no rule to say that once it moves in one direction and it reverses off one of these targets, that it's not going to break the downside of the range and hit the downside target. So you can trade either way. Okay, let's grab it and let's move to the next one. You see we had a breakout and we moved the upside. Okay, now you'll notice that I've got a level here 32.8, and the reason that is because often you find price hits a 32.8 and then fails to break through it, and that would indicate a failure of the breakout, which allow you to get out of it without too much damage. So in other words, if you see a double top at this level, and I think there was one, I'll have a look for it now. But if you see a double top at this level, you'd rather just get out of the trade, either for break even or for a little bit of profit, and wait for the next day. Okay, so again, you can see the height of this range is the same as that, and we had a breakout, and see all the targets were hit to the downside. Okay, and here is the example that I was referring to. So you can see we broke the range, we hit the 32.8 there, and then back, and then we failed to break it. You can see this hour bar here indicating that nothing is going to happen. You can get out of that. Okay. The other important level to watch is the 50% of the range, because often you find price comes back into the range, and then at the 50% level, it'll find some support or resistance depending which way it's going, and then continue up with the break. Okay, so this 32.8 is really just a confirmation level for me. If we break through it, then I have confidence we're going to hit this level. If we don't break through it, then typically I'll just get out of the trade. So wait for the first one, it pulls back, wait for the second attempt. The second attempt doesn't break through, then I'm out the trade. Okay, so basically all it's doing is just saving you the pain of having a stop here, and then it comes back the next day and stops you out before moving to the upside. Okay, and we'll do a couple more here. And here's a great example of a move to the downside, breakout target, target 1, target 2 hit. and then we break it to the upside, and we hit breakout target and target 2 again to the upside. Okay, so this is pretty much something that I utilize every single day of my trading life. And you can see here how we're trading inside the range and then broke the downside, pretty much got the breakout target here. Remember, it's not an exact science, and that is pretty close. So that would have been an area to take profit. And sometimes what it is worthwhile doing is not have your take profit on the breakout target, but have it 2 or 3 points above it. So if this kind of stuff happens, it does trigger you. Okay, so that is kind of the breakout strategy, and you can see that we've only really had one failure in the examples that I've shown you, and that failure wouldn't have cost you the stop, but you would have been able to use your brain to say, well, it's not going any further, let me just get out of this. Okay, and you can see here is another target 2 hit. It doesn't matter how often we go through this, you will notice that more often than not, the breakout target and target 2 gets hit. Okay, and we're now here, this is 4th of July data, so not really going to worry too much about that. So I won't be trading that breakout today, but you can see here where the breakout came back to test the 50% and then went and hit the breakout target. So that is kind of the rules that I follow on this trading strategy. And as you can see, the however many days I've shown you now, 20 odd days that we've gone through, we've had one that didn't work out, everything else worked out. And that's pretty much the success rate that I've had the last couple of months on this. So I hope it helps. If you've got any questions, fire away in the comment section. I'll answer them for you. But yeah, it's well worth using this as a strategy for some day trading. Anyway, guys, hope it helps. If you like what you hear, subscribe, give us a thumbs up, drop us a comment, and I'll catch up with you later. Cheers. Enjoy the day.